Hello and good morning, everybody. JJ Edwards here. Give me a moment, guys. I see there is an error on the screen. We're online now. Good day and good morning, everybody. JJ Edwards here with another live trading. We're looking at Nasdaq. Okay, give me a moment, guys. There's something wrong with my screen. I have to fix this. Let's look at the regular trading hours. So we have a huge gap. The market opened gap down. So currently it is logic to see the price having a bounce. I had this feed at $30,349. That one is tapped. The bias is of course bearish. Where is 930? That's 930. 30. So at 9:30 the market tapped into the liquidity below this fragile field at $228. My bias is short for what I have seen yesterday on the daily chart. So this morning, let me explain this trade first. We had this run above the liquidity of the previous day's high. We had 2 wicks in here showing there is liquidity or pending orders at that area. We had a run above it. Then the sell-off began. I did not participate in this leg, but on a return back to mean threshold of these bullish candles, I entered short 15 micro contracts, and I could manage to get out with almost with slightly more than $1,100. But that was the London session trade. Now we are looking at a leg up on Nasdaq at 9:30. This feed is done. My eyes are locked on these 3 bullish candles. I want to see if they can hold or the price can potentially also get to that high. Since these are bullish candles, I want to highlight them in green. That's the 50%. I see Now I should take a look at the order flow. Let's have that on our chart for a moment. Yes, it's here. So the today's point of control with 544 contracts is here at 298. At the highs, we have the value area low of the previous day at 578 and the point of control with 2,000 contracts at 685. If I want to go short, I'd be very confident to go short in either of these levels, but not in here. So to go short, right now I want to see what do we have at the lows. At the lows, there is one swing low. So we got one feed in here, which looks like a reversal. On the other hand, as soon as the market opened, it tapped into the liquidity below this level. You guys can see we have a tail below $228. So before the market starts, it already took a liquidity and now it took these equal highs. In my opinion, based on the current structure, the uptick in momentum can potentially resume, maybe go up here or here. And as for the 1 hour chart, my bias is bearish for an obvious reason. We had this beautiful upsloping channel. It was broken down yesterday. It did not return to test it. This is something that might happen today. I now want to use the VWAP. I have to switch to here. That's the upsloping channel, which the price broke below. Now the bias of the market is bearish as long as the price is trading below this trend line. I want to use my VWAP, anchor it to one of these lows to find the next support based on volume. So at the source, I pick low. It's already below it. This could be also a bear trap. Another one is here. It gives me an approximate price of $106. If I set it to close, I guess it would give the same price as here. Let's wait for it to update. Yes. So we are on support, and that support also we have one inefficiency here that's above this breakout. That's why I suspect the price can potentially at least go a bit higher. Let's go to 1 minute chart. Let's see what else we have here. Good morning, Chuck Wow. Chuck Wow Shot. Good morning to you. It's the same strategy that I have utilized to sell during London session. If you guys know with my work, I go heavier, 3 times heavier in London session in comparison to New York session. And the reason is we have less manipulation during London session, and that's why I have more confidence to trade with a bigger lot size on London or in London. Let's go to order flow. All right. So currently the price is now below today's point of control. We also have a ton of volume in here, so POC can potentially change to this portion of the chart. That's a possibility. A ton of sell orders came at the highs. Also, we have a follow-up. Speed of tape shows aggression is in the market. Let's go to CVD. big sell order, but still we don't have a low. Looking at the cumulative volume delta or CVD, it is telling us the effort of selling is there, but the price is not following. This could be as a result of passive buyers being in the market. Therefore, going short requires more cautious than going long, since it is obvious we have passive buyers in the market. Let's go to price action, because there are certain levels that I am interested to keep an eye on it. The first level is here, so we are passed through it. The second level is I want to measure half of these trap sellers. I guess we are below that half. Yes, we are below that half. Okay, it's attacking fast to this low. It came 50% to this bullish trap, but to sell, I wanted to have that or this wick inside it and stay a bit longer in this portion of the chart to give me an opportunity to go short. But we all know how the market reacts during New York session. That's exactly why I love to trade heavier during London session. I have this VWAP anchored from this low from Thursday, May 21, 2026. That's around $102. Round price 100. Let's wait and see how the price is going to react to that level or perhaps the current levels. All right, 9:30, first fair value gap presented itself in this portion. I like to keep these for the entire week, maybe month. So this is June 04 first FVG. It's not first FVG. NY 930 FVG. Text should be small. All right, and show it to current interval only. I would like to mark 10 a.m. Let's see if we can add more wins to our portfolio today. We had a good morning. I did not stream that because during morning I also do other things like editing videos, stuff like that. Let's have MES on this portion of the chart. Let's look at order flow. Here we are in the order flow. Sell-off is serious. You guys can see that. We have a serious sell-off, yet did not make a new low, failed to do so. We have one inverted fair value gap, getting ready to go long on Nasdaq. For me to go long on Nasdaq, I need a few confirmation and a few consideration. I have a range here. I have one range in here, 25%, 75% is the discount. Let's add one buy limit there, move the stop, $75. I want to set it to ticks, not money, because I don't care about how much it is made. I like to see the tick data. All right, that's $70 at risk. And profit should be there. Okay, let's check the order flow. Yep, I see 57 contracts long came in order flow right here in this portion. I want to see if they can win and push the price higher. So CVD have that divergence. We have buy orders coming in. They're still pushing. And there we go. So buyers, they could win this candle with these 57 contracts. Once it takes this high, I would like to move this stop to break even. Already, okay, stop to break even. Struggling with 50% level. It already wicked or tailed into the discount area sensitivity once. Let's check the risk to reward. So my stop was here. 1 to 2 is here. So that's 1 to 2. Yeah. Okay. Good trade here. Okay, allow me to go back to the chart for newcomers and explain why I take this trade. Let me zoom in. So first, based on the price action, I did a price action and then I show you the order flow. I show you the order flow that why I took this trade. So here, sorry, the screen was on order flow because I'm using only one laptop. Entered here in the discount, exited here with 1 to 2, right there. So why did I take this trade? Is the same method that I did in the London session in this portion. So let's forget about the liquidity sweep and let's forget about fair value gaps and things like that. I just want to know if the market is going to turn bullish or at least have one bullish leg or not. That's what I was counting here. Are we going to have one bullish leg? Going to order flow. We start having a sell-off. Let's zoom out a little bit. We are having a sell-off. The sell-off is shown in the CVD. Look at all these big red candles on CVD. CVD is very low at minus 5,000. But look at the price. The price did not make a new low. The low is here. So based on the volume, that's the low of CVD. So far, we have a synchronized market, not a manipulative market. But as soon as the market opened, in this leg down, CVD, that's the effort, selling effort, exceeded below the volume of this low. You see that? But the price did not follow. Second attempt, second sell-off was even bigger. Sellers, they did push their price lower. However, again, they failed to take the low. That tells me we have passive buyers in the game. And once those passive buyers turn aggressive and do some tactics, change the tactics from passive to aggressive, we're going to have a new bullish leg. So I waited to see, do we have buyers coming in? They came in, but where they came in? That's algorithm. They came in the discount. That discount is 75% or the lower portion of this bearish leg. We have a bearish leg. That's a bearish leg. The price closed above 50%. You see that? When the candle closes above 50% of the leg, either it's bullish or bearish. In this case, we are talking about a bullish leg. So close above 50%, no wicks. That tells me aggressive buyers have stepped in. On a return to the discount, I went long. I did not even wait for order flow to show me that 57 buy contracts. Let's go to order flow. I did not wait for this 57 long contract, but when I saw it, it increased my confidence in this trade. Again, we are seeing wicks, and 56 sell contracts is being absorbed here. Sellers are still pushing. Does it mean the market is going to make a new leg? No. So far, we know that there is a massive amount of passive buy orders in this portion of the chart. That portion is the 75% or the lower portion of this leg. If sellers sell enough money to make those limit orders disappear, to eat all those pending orders, then the price can follow and rip lower very fast. And that's a scenario where the price catches up with the volume, CVD. But until then, the bullish leg is valid, and we can participate in a new buy order, considering, do we have any target at the highs? Yes, we have relevant equal highs. This happened yesterday. On the other hand, if I go to daily chart, guys, if I go to daily chart, I mentioned last day, this bearish candle was all the way down here. It almost erased, that's MNQ, yes. It erased almost 2 days of gains. And when that happens at the highs, because S&P 500, oh, that was S&P 500 MES, sorry. Yes, MES. See that? MES or S&P 500 micro, it erased on this day, last day, 1, 2, 3 days of gains. That's a reversal. That's a reversal. Therefore, until the market show more of its hand, I have to be very careful with every trade that I'm going to take. So let's go back. ES is also ripping higher. You see that? Okay, ES made a new high. Now, let's see if Nasdaq can give us a new opportunity to go long. Oh, it already went. I was talking, already went. That was the second opportunity this week, but there will be third, fourth, fifth opportunity to go long. It's the same scenario. Now, 10 a.m. is not here yet. That's 10 a.m. Let me make it a little bit more revealing. That's 10 a.m. That's 9:30. Now I have to wait for 10:30 a.m. to check what else I have in terms of information to go lower. I do not like to see more wicks or tails in this area because every time the price taps into it, it makes that liquidity area thinner and thinner. I hope my explanations are clear, but if you guys have any questions, any part you did not understand, you are here, I am here, and I will be happy to help you. So let me celebrate my gains so far today with the beer. You know, guys, if I have a green day every day, I'd be an alcoholic. So I should be thankful to God that I cannot make a green statement every day. So some days I am red on a statement, and that red in statement affects my mood for several days. Even though if I have green day tomorrow, the day after, and the day after, still I won't be drinking because I won't be that much happy. All right, same scenario over here. The price is again entering the sensitive area. A close below it. You see, that's how many times? 1, 2, 3, 4 times. So let's go back to order flow because I want to show you another technique. Okay, I just had, sorry for my hair too, because I just took a shower and my hair seems messy and I did not shave. My apologies for that. But tomorrow it's going to be fun because tomorrow is NFP day. That's going to be fun. All right, let's look at order flow. Now, the point of control is here in the middle. That's dangerous. Every time the point of control is in the middle of a range. Let's go to chart. Let's look at the price, 260. 260 is in the middle of this range. It's not at the high, it's not at the low. It's right in the middle. That's a double-edged sword. That to me means it can rip lower, it can rip higher. So in that case, every time I see the price is tapping into this liquidity, this range, exact range, I'd be more worried that the sellers in the CVD, they're constantly pushing, that they might finally win and take a low. But here's if that happened, because a good trader must be ready for every scenario. But that doesn't mean the market can turn bearish all day. Absolutely not. We know a ton of sell orders are in the market. That indicates we have their stop loss at the high of the day. So maybe the price would go, take this low, and have an inversion. So right now I have this information that buyers have been accumulating here. That is the information we have right now. Buyers are accumulating at this price. 230, 229, let's make it 230. $230, you see that? Now these buyers are trapped. 103 buyers stepped in, all of them absorbed, they are trapped. Now, as soon as the price takes this low of the day, that's London low, I will wait for a reversal because I know we have passive buyers. After it takes this low, I want to see aggressive buyers. Now, where is this low located? Going to 1 hour chart. Where is this buy located? This low is so close to the average volume area, that's VWAP. It is nearing where 30,100, that's also a round number. If I set this source to close, it's right there. Confluence, we have a confluence. And that low is also in conjunction with this bear trap area. That's a bear trap area. Bear trap from May 28. All right, set. Okay. Show me current interval only. Okay. Since you see that it's going, now that wall is broken, that's why it's going down very fast. See that it's going for this feed. Now I can remove this one. It's 10 a.m. and 10 a.m. first candle is here. That's the first bullish candle. This candle is very important. I explained it yesterday and I will go through it today. This is a bull candle that resulted, whatever sellers done, whatever happened, it resulted in a bearish run that can potentially take the liquidity of London low. It's done. It took the low. Oh, I could sell. Oh my God. I talk a lot. I forgot that I could sell ES. ES reversed because we have divergence. Shit. Anyway, that's okay. It comes with stream. That's why during London, I don't stream during London session for concentration. So that's a bear trap. Now I want to see aggressive buyers coming in, and I'm looking at this one. So here I want to say this is June 4 NY 10 a.m. bull trap. So we have a bull trap. It is a bull trap now. It is a bull trap now. But I want to see if it's going to remain bull trap. Current interval only. Because we can turn bearish here. We can become bullish after the price takes above this level. Now let's look at order flow because I want to see order flow in here. Now my eyes will be locked. That's an aggressive buy. See that? I said I'm looking for aggressiveness. A ton of sell orders. And look. Let's see how this candle closes. Look at the candle and look at the candle on CVD and compare it with the candle at in the chart. At first it was at the highs. If it was at the high, it was closing here, that would indicate in this candle presents both passive and aggressive. That means with a lower effort they could push the price higher. Now it's very important to check this area. I see a moment to scalp on gold if I can. Let's see. All right, let's monitor this portion of the price to see if we get any sort of reversal. Let's look at gold. Where are we? It's a very thin liquidity, so the downtrend can potentially continue. It's the same scenario. The market is selling, but the price is going higher. That was absorption. That was absorption. Sellers were not getting everywhere. We have equal highs and the price can go a bit higher, but currently it is testing this portion because it has a ton of liquidity void in that area. All right, we have another bullish candle. Let's see how's it going to play that. Okay. Yes, we have aggressiveness. Let's get ready to go long on Nasdaq, but let's get ready to go long on Nasdaq. We have sellers that they are absorbed. I want to see how this candle closes. Okay. All right. Okay. Yep. We have aggressive buyers. Let's go to the chart. Let's go to trade. Right. I'm not worried. It's not going to go without us. It always provides more entry opportunity. All right. Now it's above at 10 a.m. If I could go long here. If I go long there, in here, stop would be all the way down there. That's a very big risk. That's too much. Because that should be the logic profit take. I don't like entering in a trade with with this risk to reward. It already closed above 10 a.m. bull trap. So this should be my entry. Okay. I don't want to risk more than this. How much that risk would be? $186.90 for this trade? That's too much. It went way too fast. Too fast, too quick. Let's see the 50% of this range. 50% is here. I don't want to risk more than this much. I know it's going to go higher. We spotted passive buyers. We spotted aggressive buyers. But now it's a matter of entry. For the entry mean threshold. Now I have a low. If I had one low in here, So it already was doing a damage down here. I'd be more confident to enter at the mean threshold and put my stop somewhere at the lows. But I'm not optimistic that it would provide a new opportunity. I shall see. Let's see. Actually, 50% is here. Actually, 50% of that leg is there. Now, I don't think if it would ever return. You know, yeah, I guess it's going without us. That's the downside of trading Nasdaq in New York. Oh, we have ES. Let's see if we get something on ES. Order flow has something. So oh my god. Yeah, it's going without us. Now I will be bored the entire session because I don't have any orders. S&P 500 is also... Maybe I can find something on S&P 500. Why these two charts are so different? There's a big difference between ES and Nasdaq today. The hell? Maybe I can find a reversal in here. Let's see. Maybe it wants to become bearish because at the lows now we have these equal lows. They have a high of the day, respected the fair value gap, returned to that area. I'm a bit confused now. Let's look at order flow. I just scalped on gold $20 after I saw this big order came here. That's a bear trap. You see that? These are trap sellers. Price came right at it. Buyers stepped in. We have a wick. 30 seconds, $20. Okay, let's go to Nasdaq. So the price of this platform could be, now we have trapped buyers. Okay. Let's wait and see. High, new high. Let's see. Okay, it's getting interesting. Today is going to be very educational. We're going to have a very educational day today. All right. All right. I have to wait and see how the price reacts after it takes this high. These wicks, they are telling me we have passive sellers. Let's take this high first. And then if I see aggressiveness, like yesterday, because yesterday, same thing happened during the regular trading hours. That was it. Sell off 9:30, went up to cut that high. Market pending orders, passive sellers in this portion. The wicks is they're telling us return, and then the sell-off resumed to the low of the day. So same as yesterday, I would like to see if the same scenario persists today. A dip to this level, I'll be a buyer in here. The point of control, where's the point of control? Again, it was on order flow and I was explaining on the chart. Fuck that. All right, the point of control is constantly shifting to the middle. Right now it's here. Absorbed buyers, aggressive sellers. This is a saw, a double-edged sword, because still we are in the middle of range. But I like to be a buyer down here and a seller after the price takes this high. So waiting for it. Yes, I was at the order flow screen. Sorry, but I'm not. I moved to my summer house a few weeks back. And I did not bring my big monitors. So I have to switch between screens while working with one monitor. Now, okay, let's go to trade. Let's go to trade. Okay, we're on the right screen now. All right. I was saying in the 1 minute chart that last day we had this scenario. The sell-off that we participated last day, you guys can go and watch that online. It's recorded. We have take the high, I call it temporary feed or short feed or low-hanging fruit, whatever you want to call it. These 30 wicks, they told me that we have passive sellers. I also confirmed it in the order flow. You're welcome. Thank you for understanding. I also confirmed that on order flow, I went a few short here, got stopped with small break even, small losses, and then I participated new short orders, also new short orders here. Also got a few stops in this jagged area, but I could manage to take this leg. So same scenario, I'm waiting for today. So today, based on the current structure and what I have in order flow, which the volume profile is in the middle because we're in a range sideways area. Volume profile shows the point of control is in the middle of a range. That's a double-edged sword. The price can shoot up higher and the price can shoot up lower. Based on the 1 hour chart, I mentioned this VWAP that anchored from this low, and it's right there. So my bias, because of this VWAP, it's hard to break below it. It's kind of a little bit bullish, only because after the breakout, we still don't have a return to the scene. We know that Nasdaq is a heavy index, and there should be a ton of orders left at the highs, sell orders at the highs to be filled. So if the price falls below here, I will seek for bullish setup. If I see a reversal, I will turn my signal to bearish once it takes this high. However, at 30,402, we have these equal highs, and that's London. New York did not trade this range, so it can shoot up and go higher in this range. That's why I would like to be a buyer in this portion of the chart. On the other hand, ES is making a new high. Nasdaq did not do that yet, and I want to be more bullish on Nasdaq. But I could find one low risk, low probability trade. That would be entering here, stop there. How much that stop would be? Okay, already took that high, so there is no need. Yeah, already took that high, so I cannot use this setup anymore. All right, no, it closed. It's bullish. It closed above it. Let's look at 5 minutes. Speed is gone. Yeah. It shoot up very fast in here. Did not. I mean, over here, it went high. It came back, so I could enter. It didn't happen here. Just ripped higher because of what I explained in the order flow when I showed you the order flow about the passive buyers. So we did know passive buyers are in here. I wanted to wait for aggressive buyers, but I don't chase the price. I wanted to retrace at least to this bear trap area so I could at least go long at $198, move my stop there. But no, the market planned to rip higher and make me very, very bored today. Your Mac has been updated to 26. Okay, thank you. All right. London session is much better for many, many reasons. For so many reasons. It provides second and third opportunity to go short. So let's go to that London trade. It's the same scenario, same strategy I use on order flow and also on price action. We had a feed in here. We had a high in here. It's the same. These wicks, they are telling me we have passive sellers. These tails, it tells us we have passive buyers. But a support or a feeding area is not a pinpoint to buy and sell. I want to see aggression. That aggression happened here on this portion of the chart. There is your aggression. That's aggressive sellers in the market. Check. Very nice. So what did I do? I measured the last chain of bullish candles that are trapped. If they are trapped, the market doesn't allow to close above it, because if it does, all of them might get out of their trade. And if these people, they get out of their trades, they don't have the stop losses at the lows. So now the market will lack liquidity. What it does is it goes to the half of the bullish of trapped buyers. Those trapped buyers who are scared because of this bearish leg, what do? They start selling their Nasdaq. To who? To sellers. So sellers, they know they can sell more because sellers exist in here. These guys are selling, these guys are selling, and then bam, we have that leg. My entries, look at my entries, it's in the middle. The third one, the last 5 micro contracts, is at $529, right at the mean threshold vicinity, and the mean threshold. Took a partial, took a partial, took a partial in this portion, took a partial below this low. Below every low I took some profit off, and the last one was the biggest one, which I took a partial below here. I had no idea the entire London session we we're gonna have a sell-off. The order flow doesn't show that. Nothing shows that. Nothing does. But I knew that we have equal lows in here. Look at that. I saw that we have relevant equal lows in this portion of the chart. So I knew that I should keep at least 2, 3, 4 contracts for waiting for the price to get to this low. But that's what I did in here. I closed some more when it got close, because sometimes the market doesn't take a low, like last day, New York session, we had a dip. Where is it? Last day New York session. Yeah, look at this one. I don't know, I don't remember where it was. Anyway, okay, let's go to the chart. Let's go to the chart. So it's the same scenario every time. Now the price is way too high. I'm not gonna join in a sell position because it's too high now. But maybe I can find another setup. Maybe I can find another setup. Maybe I buy again if the price gets to this point. Let's wait and see. Let's wait and see. Let's look at order flow meanwhile, because that is a little bit more exciting. At least we can see the big trades and all that stuff. So right now the price is above the value area high. Okay, that's bearish. The price is above the point of control. That's bullish. And CVD, the price almost made equal highs, but look at the CVD. So we have a big rise in the price, but CVD doesn't show effort. That has a message. It gives us the same message yesterday. So we already know that we have aggressive sellers in the market. CVD shows that. What if they have stopped being aggressive because the price is already at the lows and they want to become aggressive and passive at the same time at the highs? That's premium. CVD gives us that there is a possibility that sellers allowed the price to jump higher on purpose by removing their pending orders and their aggressiveness to lure buyers to step in so they can start selling in the premium price and push the price down and hunt the buyer's stop loss. That's what I want to keep an eye, because right now CVD shows the manipulation level is at its highest level. It's very high. There's a divergence between ES and Nasdaq. There's a divergence between the price and CVD. It doesn't make any sense. CVD is making lows, price is making highs. And the point of control is right in the middle. And we almost have equal highs. So this is a very manipulative situation. And I want to read it. That's how I learn. So to me, we have aggressive sellers. Now I want to see passive sellers because so far I don't see any wicks. I don't see wicks. I don't see any heat map. Where's the heat map? I do have heat map, DOM level heat map. I don't see shit. Where is it? There, I don't see anything. I don't see any heat map here. Does it even work? Where's the heat map? Doesn't work here. I have to use the old attest platform. That one has it. Okay, now I see wicks. There you go. That's passive. And I also have this tool that's speed of tape. So speed of tape, it tells me sellers are jumping in the market very fast. So we took a high. We have wicks. But my eyes are locked on these chain of bullish candles. Okay. Let's see if they can invert this. If they can invert this, then things will get interesting. Once again, there's a ton of effort by sellers to push the price lower, but the price is not following. We have passive buyers. The market is filled with passive buyers. Oh, 90 contracts. They bought it. Let's go. I just entered one micro contract here. Let's go to order flow. Don't take my stop right now. Did you take my stop? That was that fast. Let's go long again. One moment. What the hell happened here? Okay. All right, I saw absorption in the order flow. Where is it? Where is the order flow? God damn, I have to click 10 things. There it is. That's 60 contracts absorption in the mean threshold of these bullish candles. If it's going to make a new high by absorbing that, let's see. So I am in this trade. Maybe I should move the stop to break even. But if I can make this thing work, okay. All right, let's move the stop to break even. No, it's too early. Let's close above it and then I bring it to break even. So I already got a stop with 20 ticks. This is 40 ticks. It did not close below 930 fair value gap, so it's going higher. Let's bring the stop to break even. And as for the TP, oh, that's a very big TP. I guess that's ambitious because my stop was only 40 ticks. I don't know. Let's see. Let's look at ES. Still bullish, still strong, standing tall. Let's see about this one. I'm already in 1 to 2. I can close it. It's okay. We are learning. And I have to smoke. Let's look at order flow because we know that trade is there. So there it is. That's aggressive buyers. I see more wicks. Now I have to close it. See, there's your wick. Let's see if it can hold. We have a ton of aggressive sellers. they're having an issue. When I smoke my cigarette, I tend to remove the camera so you guys don't smoke with me. Trading can make people alcoholic, smoking, and both of them. So most traders who use this as a career, they don't live that long to enjoy their earnings. Let's go to order flow. Oh, we are at order flow. Okay, please go higher. Stop at break even. Lingering in this area, we still have wicks. Okay, let's secure more profit. Maybe 30 ticks. 20 ticks, that's $10. That's $9. Let's make it $10. I would pay for the beer. No, beer is not $10. All right. I guess the close is okay. Let's not be greedy. That would be $100. That's enough. Let's look at ES. Is also making a bit higher. I wish I was executing 2 micro contracts, but my rule for New York is 1 micro on each trade only. I am in $50 profit. I guess 150 would be okay. What did happen? What happened on order flow? I see aggressive sellers coming in. One moment, I close it. I have to close it below this close here. If it comes below this, because I saw big sell came here, that's the wick for. Are you gonna make a new high? That's $45. That's okay. That's good. That pays for the natural gas money. Yep. Okay. Yeah. I'll show you guys. There you go. Order flow tells us 76 contracts was sold at this high. So we have aggressive sellers that they can push the price lower anytime that they want. Respected 50%. At 50%, that was the signal. 50%, we have passive aggressive sellers trapped by passive buyers. We have a wick. I entered. My profit was here, but aggressive sellers again bugged in, and I got closed with 90 ticks or $45 with 1 micro contract. Okay, it's gonna go higher. Definitely, it's gonna go higher based on what I see in the CVD and all these absorbed sellers. The market is bearish, but it might hunt their stop losses first. They're selling gold as well. Let's look at gold. If I can find another opportunity on gold. Oh, look at that thick area. We might see more passive buyers coming in here. So if I want to go long, I will wait for the price to take this low. I want to scalp here as soon as the price enters near the point of control. What do we have here? Aggressive buyers, absorb sellers. Did it take this low? Yes. Okay. I just had another quick scalp, made $10. This portion. You see that? Absorb on this wick, where it is, at the point of control, right at the point of control. I can do another buy too. I can make another $10 maybe here. All right, let's go to Nasdaq, see what Nasdaq is doing. Trapped buyers. All right. Point of control shifted to the high. So the point of control is no longer here. It's here now. So let's see. A reversal, a close below this area would signal bearish. A return to the mean threshold would convince me to set one pending order here, stop above this, and target the current equal lows. Let's go to trade. Let's look at the order flow. More wicks. That's good. That's okay. I want to keep an eye on ES. ES is closing this portion. Where is that portion? What is it? It should be important that I highlighted it. It's below this low, so visiting the area that it broke late yesterday. Yeah, this is very suspicious. That seems like distribution. Maybe it would take a high and then reverse. So that's something I will keep in mind. The time is, what's the time? It's 10:50. So yeah, usually markets start consolidating in this portion. On the other hand, ES made a new low, closed below this level with two big bearish candles. You call highs. It's near the previous support, which acts as resistance now. It is constantly moving around that fair value gap, which is I don't know if is it inverted or not inverted because the price is not closing higher. To me, it seems like a distribution because it's above the daily range high. That's something we should keep in mind. Getting a bit boring down here, but waiting. Still moving and lingering in a narrow range area. Now we have sell order coming to the market. So they're selling at the highs. Oh, thank you. Acris Pilos. Thank you for your comment. Well, the thing is, I don't have flashy houses or flashy cars. I do have good living, but trading has been paying my bills and having progress in life for the last 15 years. Only those traders in the level of Wall Street that they work for billion-dollar companies, they are the one who makes a ton of money. I work for a company in Russia, and all my co-workers, we work for them, we work with percentage. We take 3% of the total profit that we make for the company. It's decent money, but that money would never buy us a luxury car or a luxury house. I see these things on YouTube. I guess maybe they could be rental, or perhaps they sell courses, trading courses that doesn't work for them, but they're selling somehow. That's it. Maybe they're doing that. But I have been in this environment long enough to know how traders live. I know professional people. The people who owns the company, he's rich. He makes $few million a year, a month. But we who work for him, we live with a fixed salary, also with a percentage or rebate from our trades that we make for the company, which is usually 3%, sometimes up to 5%, depending on how much we return. Even if I had flashy cars and houses, I would never do that, because that's deceiving people, and it's against the Lord, against the God, against humanity, if you're asking me. Here's the thing about trading that I learned in trading psychology. Also, I have seen that among my comrades, my colleagues, we don't have much of emotions. So over time, we develop this mindset, this skill, these attributes that we don't have greed, we don't have fear, we don't have oh, Nasdaq went higher. Okay, finally it moved. So we don't have fear, we don't have greed, we don't have jealousy. So a ton of our emotions, because of this job, has been diminished over the last decade. The reason we don't revenge the market, we don't get cold hands, I don't fear from taking a trade, is because over time those feelings diminished, still there but dimmed a lot, where my girlfriend sometimes tells me, you don't have any feelings, you don't care about anything, even though I do. But over time, that's what happens to a person. We become lonelier and lonelier and lonelier. That's a trader's life. And showing off home, car, watches, and things like that, that comes from normal human attribute or behavior. That's why I am super duper sure that all those influencers, they never made money in the market, because they are still struggling with everyday matter, everyday emotion. Because posting of riding a fancy car, which could be a rental, or even if you own it, that's being phony, that's being a normal human. And a normal human cannot sustain in a robotic market, in an algorithmic shark, tiger, wolf, a market that doesn't have any remorse, a market that doesn't care that, hey, I just wiped out billions of dollars on Bitcoin. So whoever does that algorithm, those people, those institutions, they don't have any feelings of remorse. I guess it's Mark Saylor, MicroStrategy company, who owns almost the most Bitcoin. He goes here and there and he talks about Bitcoin, provoking retail to buy cryptocurrencies, because he's underwater. He's trying to convince retail to join in his mess. But even though he's the biggest buyer Bitcoin we know worldwide, the Bitcoin price is going lower and lower and lower every day. Why is that? There is someone else who's not flashy, with a ton of more money than this Saylor guy who's selling Bitcoin. That's a trader. He's successful. Saylor sucks. That's the difference. All right, so let's go back to our analysis. That VWAP came into play. We went long one in here, but on the other hand, we had the plan to go long after the price took the liquidity below $163. Unfortunately, no pullbacks, and either entering here or anywhere in the chart, the stop loss just could be very wide. I tried 2 long contracts, got stopped. First one, 20 ticks. Second one, 30 ticks of stop, 90 ticks of profit. I knew that the price can potentially take this high, but I don't have any place to move my stop except this low. I could leave it this low, but the profit to risk just did not add up. If I would leave my stop here and my profit here, that's 1 to 1.3. It's not ideal in long run. The account balance will go negative with this type of risk to reward. Okay, now that we have made a new high and took out this one, now we have in 50% of this range, the market doesn't show any sign of becoming bearish. So I want to remove this for now. I can use the same area if I see a reversal from $30,000. I can use this area at least to potentially leave my pending order to join the short market. We know that London had a big sell-off, and that's a very big gap between the price. The market came down, expected to take that feed, touched the VWAP, anchored from that low. It's bullish. It wants to go and fill the gap, the regular trading hour gap. That's what the market is planning to do. And that regular trading hour gap is super duper huge. There we go. The market closed here yesterday, opened there. Half is here. That's a very big thing, slightly above that high. So after the price takes this high, still I want to see if I can find a bearish setup to go short on Nasdaq, or maybe S&P 500, whichever comes first. All right, I have that 50% of this bull trap. The market had a halt, rested here a little bit, and now it's going a bit higher to $30,000 and 402. So let's monitor the price action above this level to see if we get any reversal. I ran out of beer. I have no choice to put on some tea. So I will be back in a minute. Wow, look at that. Okay, completely ignored this one. Look at that big leg. I missed I missed it. I missed that leg. I missed that leg. That's on me. I had no entry after it took this low. It was a textbook that this VWAP can hold. This was easily, I could make $500 at least here. Not for me, for the company I work. So for example, today, let me check my account. I want to tell you. Let's check the account first. Today I am up by almost $1,300. So $1,300, let's calculate it. If I calculate this, 1,300 cross, yeah, $40. So that's my share. And I do trade for myself a separate account, scalping on gold. But that's a whole different strategy. All right, let's look at the regular trading hours and measure that gap again. Closed there, opened here, right at 50%. Okay, I want to name it New Day Opening Gap. New Day Opening Gap. Let's make it a bit thicker. That's good. Now let's go back to electronic trading hours. So 50%, we see some wicks. Let's go to order flow. That's gold order flow. Let's go to the Nasdaq. So what I do here is I want to measure this leg, the volume. It tells me the point of control is still here. So it's a long road before becoming bearish. And with a little effort, bulls could push the price higher because they absorbed all these sells with passive holders and sellers ran out of juice. So it makes sense for the price to rip higher that fast. What I want, so here on Nasdaq, I will wait for a few bearish candles. They should be big, they should be strong to see aggressive sellers. And then I will measure it and find a mean threshold to leave one pending order. Still no sign. The price is in a discovery mode. Let's look what else we got there. 25% range is here. Let's wait. Maybe PM session would give us something. It's 11:15. All right, let's go to the chart. Now it's approaching 25%. I don't see anything here significant that can hold the price. We'll look at the 5-minute chart and the 1-hour chart to find some kind of sense. So over here we have a chain of bearish candles. That's 5 minutes of selling. It's about 50%. So 50% is done. We got equal highs in here. That doesn't matter now. Because that's chasing the price. Before entering the market, I must have a place to leave my stop loss. And this is not a personal account. This is a company account. We have rules for trading. So before entering each trade, the risk should be logic and below a firm and reliable low. I am not allowed to chase the price at the highs, hoping it would go higher. It could go higher. So based on the strategy, every down close candle is a fuel to push the price higher. In this case scenario, the down close candles were here. That's why I entered long as soon as I saw those big orders coming to the market. You guys can see every down close candle has been respecting this portion. My idea to go long for this trade is the mean threshold half. So I can leave my stop there. If I enter here, which I did, I had to leave the stop at the current low. That would give me, that's why I stopped once. and the second attempt was a win. But if I wasn't closing in here, I would have been stopped once again in here. That's a wide stop loss. No one knows that the price could go as high as this. So the profit is perhaps this high or slightly above that. In the bear market that the price went down this fast, no one can tell we could have this big ass bullish run. Second time that I wanted to go long was here. I wanted to go long here, but that's my stop. The price should have returned, for example, after this candle, the price, if it was returning this area with small candles, not a big one, that's aggressiveness, with small candles, I would have joined one long position targeting 1 to 1.5 or 1 to 2 risk to reward. Maybe I could take this leg, but it didn't provide it. So capital preservation in institutional trading is the pillar. So our structure is what they taught us in the companies. You don't lose money. You don't have a trade, that's okay, but you don't lose money. Otherwise, you will see an angry Russian at your door putting a bullet in your kneecap. That's a joke, but it could happen. So 50% of the range, the new weekly, new days opening gap range is filled. Now I have one big bearish candle in here. That's aggressiveness. That's aggressive buying. I'm sorry, aggressive selling. I go to order flow. I see, yeah, big sellers are stepping in. That's the order flow. Sellers are in the market. But the value area high is still at below the price. That's not good for a bearish setup. The value area high of the day is also above the value area high is also still below the price. That's not good either. But we can see 65 and 103 sell contracts has entered the market. So first and foremost, we must see, I should see the value area high either shift higher or more aggressiveness in the market. We have buyers presented here. I can go long at this portion. I won't be targeting the high. That would be a very quick scalp. Let's go to order flow now that I know what is what is where. Let's go to here. All right, we're getting ready to go short. This tail is the last time the market allowed bears to step in the market. So that's, you see that? There you go. That's as soon as the price neared the value area high of the day, jumped higher. I wanted to go long, but I wanted to go long inside this candle. Somewhere here or maybe here. It didn't even get there. So still bullish. Order flow told me where to look for a buy. That's here. Order flow tells me look for a buy here at $415. But I was going to wait for it to at least get to somewhere inside this candle. It did, but not low enough, and jumped higher. Now we have more sellers at the highs. Sellers have a lot of work at the highs to do before the market turns bearish. Their job is very, very hard now. Trapped buyers. CVD is green. CVD is red. Candle is red. So these buyers are now absorbed. If they close above it, I might have a tiny scalp there. Let's see. If it closes above it, maybe I can do a scalp above this candle. The value area high of the day is now slightly higher. That's there. Let's go to trading view. Seems buyers are stepped in. 75 contracts. Let's see if they will be absorbed or what. Okay, we are having more dip in the market. So order flow shows we have a few buyers are being absorbed in here. So sellers are moving more pending orders in that vicinity. In terms of price action, I cannot rely on these bullish candles. They haven't been inverted. If I want to go short, after I see break below this low, I would use the lower portion of this bullish candle. So that would be my pending order right there after I see a close below this candle. Moving the stop at the highs, that would be a high risk trade. But we are up today by a big portion. That would be okay to take that risk. So I'm going to be ready for it. I want a good close. I don't want a wick or tail below this area. So I want a good close to leave my pending order here. On the other hand, if I measure this low to this high, let's see how far this candle went. So 70%, 35%, that's half of this gain. That's exactly stop at the half. When it stops at the half like this, it is trying to perhaps find more down close candles to push the price higher. And that means one bearish leg, and we can rely on that bearish leg. Okay, let's try this. All right. I can try 2 micro. One here, one here. I would like to risk around $100, $110. That's 10% of today's profit. So that would make sense. And since the price is at the 50%, what I would bring my stop to break even very fast. So now I can set the first target to 1-to-1 to make that trade free. So I entered that's average price. There is stop at the highs. Put this stop at the highs. One to one. That's 1-to-1. It's not much to ask. And then 160 is 1-to-2. 260 is 1-to-2. Okay. Let's see about this trade. How's it gonna pan out? That's a trade. So that's 1-to-1 right there at $406. Let's look at S&P 500. How's that doing? So let's look at 1 hour chart. It came all above this formal support. It did not act as resistance at all, but it can act as support maybe later because we have these wicks. There is a high in here. That high is in conjunction with this low and this low and almost this high. So I would like to have that on the chart. That's the high. Let's look at the order flow. Look at the value area high of this range. The value area high of this pivot low to this pivot high is now here. Sellers, the value area high of the day also shifted higher. That's a good sign. We need sellers to step in and push the price below this level. I might get stopped, but if I see a reversal, I would participate again. Point of control is here. We have a ton of thin liquidity in this portion. See that? The next big buy order comes here on this candle. So you shouldn't have much of issue to feel what's remaining in this portion because we only had up close candles. There's an imbalance in this area, and I hope the price would go there and feel that imbalance, make it a balanced area. Otherwise, it might not go there at all. A new high is on the horizon. I won't be surprised to see a new high. But my bearish bias here, this much in the premium, is still remaining intact. So I will still be looking for shorting Nasdaq in this premium area. That's 50% of the daily gap, new daily opening gap. This big bullish candle is inverted with very weak down close candles, so the aggressiveness is not there. So as soon as I see the price takes out this low, I will move the stop to break even. Okay, we're having a dip. Let's see how this plays out. I'm gonna adjust the camera just a little bit. Okay, almost to the first partial. Now I can move the stop. Where's the camera? Okay, the camera disconnected. Shit. Okay, I have to fix it. Give me a moment. All right, now I can move the stop to break even. I don't like that wick. Why are you wicking? It's a wicking below this level. God damn it. Just reacting to this low. If it has planned to take this low only, let me look at the order flow. The hell is going on there? Yep, order flow shows aggressive sellers stepping in. But I guess there exists. That won't be one-to-one. That won't be one-to-one. I have to take one-to-one in here, otherwise. What's wrong with my camera? All right, one-to-one is done. That's good. Okay, I guess my camera is fixed now. Okay, just a little bit of adjustment. There we go. Okay, one-to-one is taken. Stop to break even. For the second one, let's see. Let's push this a bit down. For the second one, yep, I don't want to struggle and fight these bearish candles. So 1 to 1.5 seems a bit fair to me, considering we don't have much of information in the order flow. So the first one was how much? 125 ticks. That's good. Stop was at the highs. My hair is a mess. All right. I'm looking at order flow. Let's look at order flow. Let's switch. Or is it gonna go to my profit? Do I have time to switch to order flow and explain it, or you want to go there? It seems it's want to go there. It seems it's gonna go there. All right. Okay, the second trade is closed with 1 to 1.5 RR, or risk to reward. Now let's go and explain this trade, because this is a model or a playbook available for everybody. This trade was based on another playbook, which is new day's opening range gap and the range of the last bearish candle in comparison to the current bullish leg. I explained step by step. So over here I measured the close, right? The close is here of last day New York session all the way down to the open of today's New York session, last day to today, it gave me this range. Okay, it gave me this range. Allow me to change the color to yellow. Don't extend it. Okay, it gave me this range. The price came high to 50%, slightly higher. What I did was I said we had a sell-off, and if this sell-off was a fuel to push the price higher, how long or how far it can go? And do we have any confluence or conjunction in this scenario? So I simply use my measure method that says 70%. So 70% is here. Usually the price tends to fill the entire, if the market is bullish, which is because of the things I explained at the beginning, the passive buyers and so. But I want to see if it's going to have a rest. So this trade is not a reversal trade. It's not a reversal trade. It's a trade that I took betting on the price to rest with down close candles to have more fuels before pushing higher. And usually that happens when this range, allow me to color it, when this range is done with 50% of this range. So the 100% is here, but 50% should be somewhere in this area. No. Allow me to use another fibro. One moment. All right. There we go. So 50% right there. You guys see that? Let me remove this. Let me remove this. So this sell-off, the market rests usually when it gets to 50% of whatever that range is, which is here. All I did was to copy this and extend it higher. See that? I'm just extending it higher. Right there. Same area. 50%. I'm going to extend it to the right. There it is. And then I waited to have some kind of confirmation. I go to 1 minute chart, and now this is all depends on price action and how far we can read candlesticks. So we have 1, 2 big bearish candle. This bearish candle is closed without a wick or a tail, or the wick and tail, they are very, very small. One bullish candle shows aggressive buyers stepped in. Still, I don't have any setup. But over here, I have this specific candle that it managed to close below this low, and it is an outside candle. The high and the low exceeding the previous candle, not just the previous candle, also a candle before that. So this portion, I'm talking about this candle, that's outside candle, which has take the high and the low of that candle. When a candle like that, that is what I call a manipulation candle, which it takes the liquidity at the highs and at the lows. So I said I have one bullish candle and my stop is above this level. Where is the 50%? OBS is disconnected. Reconnected successfully. Okay. But the price might not get to 50%. So I use the lower portion. That's where my entry is. See that? 435, 442. The lower portion in this wick to enter short position. first trade 1-to-1 to secure my stop. Second partial was 1 to 1.5 according to this. It's not a high risk to reward trade for one reason. I traded the resting candle. I just traded where the market needs down close candles to push higher, if it wants to push higher. I don't know yet. I have to read the market again. So that was for this candle. Let's go to order flow. Of course, I took some help from the order flow. My humble opinion is me, JJ8. I might know price action, but without order flow, I'm like this. I'm blind. I don't see much. Perhaps I am not that good to trade with confidence without the order flow. So on order flow, if there's a tool I can use, I use it. So on order flow, I measured the volume from this pivot low to this pivot high, the valley area high. You were here, you were online, it was down below, and it gradually came higher to this portion. Also the valley area high also came higher. Now the bulls must spend a lot of buy orders in this portion to push the price higher. Aggressive sellers came in. If the price wants to close higher, it should close above $422. In that case, the probability of joining a bull market in any down close candle increases, and we can scalp it all the way high. So based on that, now I see the valley area high is pushing higher and higher. That means the price, sellers are pushing the price down, and there's no one else to buy. That's market exhaustion. That's market exhaustion. So market is exhausted. It filled half of the new daily opening gap. It traveled half of that range. It traveled half of this range. You guys can see that. Oh, shit. It traveled half of this range. It inverted this fair value gap. It inverted. It closed below this. Closed below it, we have an outside candle. You have an outside candle here. That's an outside candle. Okay, let's sell. Stop is tight, 130 ticks. And we do have a ton of thin liquidity, which can be reached with a few candles. It's not a big, large portion. So this area, the area that we only have up close candles, or the areas that we only have down close candles, those are thin areas. The thick area that we should be worried is where there is a handshake and we have a ton of liquidity in that portion. These pivot areas are hard to trade because it's very hard to tell. Is it going to go higher? Is it going to go lower? You guys that were here and watching my stream, when I was taking these buy orders, which I got stopped at the first one and won the second one, you notice I said this seems like a distribution. That means I thought it's gonna go lower because it was consolidating at the highs. I was completely wrong. Even though I went long, I did not go short, I went long, but I was waiting for the price to go lower because of that range. I mentioned that the point of control at the time I was mentioning this range area, this portion of the chart, I mentioned that the point of control is in the middle of the range. That's very hard to read. So when it's hard to read, what do? Either I am content with taking small profit with scalps, and if the market runs away like this, I wanted to buy in this portion. Look, it did came. Oh my god, I missed it again. I was talking and I missed it. Just a half an hour ago, 20 minutes ago, I said if I wanted to go long, I want to wait. If I would take this leg, if after the price took that this high, would return this range, and then I would. It did it again. Now it's going higher. So what is this? This is not, some people would call it order block, but I want to explain the way it sounds more logic. These are trapped sellers. That's it. That's all it is. Trapped sellers. These trapped sellers in this portion of the chart start closing their positions. So it's no longer a sell position. Now it's a buy position. So that would boost the market up like the way it is right now. So institutions and big companies, not they have iceberg strategies, they also sometimes they give the opportunity and the chance to those who are in drawdown to close their position with either small loss or break even, like this scenario. These are suckers. They are suckers. They suck because they sold it. It's a bull market. As soon as the market closed above this high or this portion, they start selling here. Whoever sold here, that's a sucker. But the market gave them the opportunity, if they had enough margin, to close their position. So those buy orders would help them to boost the price higher, the scenario that we see. Now, all right. Anywhere in this portion that I explained doesn't make sense, please let me know. I will explain again. I hope it added value to your trades. If there is something I missed, or my apologies if I stutter sometimes, or if I cannot explain something very good, so I apologize for that. So sometimes I explain something twice because I know that I suck at explaining things. Oh my. Tea helps the throat. All right. So the bigger picture, it came right back at the mean threshold of these trapped. But they were trapped before, but now it came back to this portion. So we do have a conjunction or a confluence here. This could result in the price to go a little bit higher, but this also could be the top of the day for the reasons I mentioned. 50% of the daily gap is filled. 50% of this range is done. The market already had a rally, and based on the sell-off during London, that should be something serious for the US indices. The sell-off might resume or continue for a few days, because in the 1 hour chart, as you guys can see, we have broken below this bullish channel that was valid since May 19. We are below that. Today is June 6, so that's 2 weeks of trading. It's no longer, it's below that. The price can potentially go higher, check this area, and then have a bounce. My bias will be bullish once the price re-enters this zone or takes out this high. Only in that case I'd be positive Nasdaq can make a new all-time high. I guess I'm done with today. It was a good trading day. London provides a steady river where everybody can fish. New York is like a storm, and it is harder to trade during New York session because of more money is involved, and more money means more manipulation. The CVD was giving us false data. The volume profile was giving us a D shape, showing the volume is being concentrated in the middle of the range. This portion, which is a big question mark of where the market could go next. It did not show any sort of big portion or staying at the lows to show us a sign of accumulation. After this bullish leg, it did not return here, and in this scenario, when we have an impulsive uptick in momentum based on experience and order flow and everything I know in the last 15 years, that to us, to every trader with experience, that tells me this is not a sustainable bullish run. So based on my experience, even though I entered multiple long positions today, but the market has surprised me with this bullish run. I did not encounter any loss or made today, only one small one in this portion. But I want to be honest with you, the market today on that bullish run took me off guard. I did not expect that. Same as this morning where I take this short, you guys can see I took the partials. I did not expect Nasdaq to have this major sell-off all the way down to here, the entire London session. London session is a steady river. There is not much enough liquidity. It doesn't make sense to do that. So any luck, okay, Chuck Wu shot. Any luck being able to reduce the delay on your stream would really find your analysis much more useful if the delay. I tried that. Yes, today I did a test run to see if I can lower. Yes, it has the option for low latency, but everything was so vague and blurry, and the quality nobody, when I opened it on my laptop, opened the chart on my laptop, I saw I cannot see the numbers, I cannot see the drawings, I cannot see the text and everything else. So that would definitely decrease the amount of quality. Actually, perhaps it's better with the delay, because maybe people would avoid copying my trade, because that's not my intention. I don't want anybody to copy these trades. I might encounter a loss. I do have red days, and that's a big responsibility. It gives me stress if anybody copied these trades. But I want people to learn what I know. I pay my bills with this trading for the last 15 years. And it was back in 2016. So 2013, I got that job in the Russian trading company. 2016, when I was promoted and I was in my best years, I gave one promise to the Lord that I will teach what I know to people. That delayed all the way to 2026. In 2026, I opened 3 YouTube channels, one for trading live, one for order flow and tape reading, and the other one is for the basics. So that's my intention, Mr. Chuck Wow. And I apologize for the delay, but if I decrease the delay, that would affect the visual quality, because I want these to remain, and I cut these in a shorter videos after the stream, so it would remain in the archive. Maybe someday some people would find it effective, maybe after I die, because I don't think if I live more than 45, I'm 41, because of the stress of trading, because of the lifestyle I had the last 15 years. I don't think that I see many years coming. So usually in an environment like this, my doctor told me either quit your job, get retired, or wait for 45 and then find a grave for yourself. So that's what my doctor told me. Anyhow, that's about it for today, guys. Trade can be very lonely sometimes. I'm so glad that you guys were here today to talk, to share. So I will see you tomorrow. It's NFP day. I will trade solo during London session because that's where the majority of my job is. I have to be very concentrated. But London during New York session, where I trade with lower lot size and contract sizes, I will be live doing the same thing over and over again. Until next stream, stay safe, stay observant, and protect your capital always with stop losses. I love you all and have a good day.